Thanks for staying with us. This is Closing Trades. We've got Mahantesh Sabarad as well joining in on the show. And Mahantesh, wanted to get in your take on the auto sector, given the fact that majority of the numbers this time around have been fairly decent, attributed to the wedding season, the pickup in overall demand, etc. What has been your key takeaway from auto sales?
I think the key takeaway has been that the two-wheeler sales have done a lot better relative to the other subsegments of the automobile sector. That's partly because they have had a typically very low base to grow upon. That said, there is also these new developments that are happening with respect to the electric two-wheeler incentives and so on and so forth that could have pushed certain pre-sales into the market. But then the overall economic recovery has been strong enough to drive overall automobile sales. Two-wheelers have particularly done well, as I have mentioned, because of the low base effect. So this is the key takeaway of the automobile sales. But I'm getting a little worried about the future prospects because we will have probably a monsoon which could run into deficiency kind of territory and could be a dampener ahead.
See how the monsoon really pans out, but we were earlier highlighting some of the cement names. What's actually joined the party is JK Lakshmi Cement as well. That stock is up around 8%, apart from the likes of Nuvoco, Vistas, etc., which were doing quite well in the trading session earlier as well. On the losing side, it's VRL Logistics which is seeing a sharp crack, and not just that, even Aegis Logistics is on the back foot. So maybe some amount of pressure coming in on the entire logistics space as well. Rainbow Children's is the other counter which has been on a slide for a while now. In fact, let's pull up the 5-day chart if we can of Rainbow Children's Hospital, because that stock has seen a bit of a slide. Okay, so on a 7-day basis, it's still in the green, but over the last 2 to 3 sessions, we have seen a bit of a downtick on that one. IIFL Finance wanted to highlight that one. A gain of 6%. Remember, my colleague Ajay had done a story last week that IIFL is likely to launch a neobank for MSME soon. It was expected to happen anytime this week. Let's see when that pans out. But for now, IIFL Finance is holding up comfortably in the green. It was set to launch India's first neobank for MSME soon. So we are waiting to know whether that clarification and confirmation has come or not. But Mahantesh, just talking about the cement counter, and you were just talking about how monsoon can play a spoilsport for auto companies. Could it be a similar case for cement stocks? Because for now, they're not factoring that. They're seeing quite a bit of up move.
See, cement is slightly different simply because there is also a government activity to be considered when cement demand is to be forecast, and that government activity has been pretty strong. In fact, the budget gave us an indication that the capex spends of the government could potentially be higher this time around. And as corporate recovery happens, we will also see corporate spending helping the cement demand. So it's not just housing demand alone, which is linked, which is what you alluded to in terms of your question indirectly by talking about monsoon affecting potentially housing demand. Yes, it could if the monsoons are deficient, but then the overall corporate level activity and the overall government activity could potentially offset the demand, problems. On the other hand, on the cost side, there is a definite slide in the overall cost structure for most cement companies. Commodities, global commodity prices are actually falling off the cliff, and that tends to be better for cement companies. It immediately comes into their margins. And therefore, from a profitability perspective, with demand remaining intact and margins actually expanding, cement companies should do better, even if it's a weak quarter when monsoons begin.
Okay, so a general positive take coming in on the entire cement basket. Meantime, just
the union ministers talking about, and they talked about 4 sectors, particularly defense. It was about airport infrastructure. It was also about roads as well as the automobile sector. If you had to take a top bet from all of these sectors, what would that sector be?
Obviously, it would be the defense sector right now because the overall penetration of the defense industry is pretty low. And from a stock market perspective, there are exciting new companies that have just hit the market in the past few years, particularly from the government side. So defense would be will be the long haul when it comes to investing. But then, interestingly, automobile, after having faced a decade-long pressure in terms of overall volumes, is starting to find its feet back again, and the mojo back again, and they are able to now start growing quite well. There are exciting new models, be it on the passenger side, even on the commercial vehicle side. There are a lot of solutions that are now being offered by the CV makers. So overall, the automobile sector has started doing well. Although I didn't understand under what context Mr. Gadkari talked about exports growing almost half. He quoted a number which was 50% of the overall industry side. But that apart, exports is actually a bit lackluster, I would say, from the earlier times for automobile industry. So what I'm trying to tell you is these industries, the defense as well as the automobile industry, are like the core manufacturing industries, which typically have a multiplier effect in terms of the overall ecosystem of the industries. They generate substantial demand into various other subsectors, right from chemicals to even oil and gas. So I would say that these two industries should be in focus, and particularly defense will be the long haul.
Take on something that's buzzing away in today's trading session. What's the outlook on Zomato?
Very closely, and I know you hinted about it earlier. What's your own assessment of whether it's going to be a pause this time around from the RBI, and what does it mean for the future trajectory of the rate sensitives?
So I definitely believe that there will be a pause, and this is going to be more or less a permanent pause from the RBI for considerable future ahead. Simply because the inflation has been well tamed. I wouldn't say that the headline inflation numbers have fallen to comfortable level, but they have been tamed. We also are seeing that the global cues suggest that the overall commodity prices are trending lower, demand environment is better. Most of the corporates are doing well for themselves, and the overall activity in terms of capacity utilization is better. If that is the case, you will generally find that inflation will try to remain slightly stagnant. But now from here in onwards, I think the markets will start ignoring what RBI will try to do. Because the major chunk of activity that RBI undertook for the last 1 year or so, between actually last March to this March, we had a big rise in the policy rates coming from RBI. That phase is now over. The market will now focus on other items and not on the RBI and RBI related activity too much from here onwards.
Okay, so that's the take coming in as far as RBI is concerned, expecting a pause and a permanent pause as that, at that is what Mahantesh is saying. But let's get the BTST ideas also out of space a bit more. The likes of Sobha, Mahindra Lifespace, they saw a massive up move in the week gone by. Which are the top stocks that you would recommend from the real estate pack?
I think when you evaluate the real estate, you have to look at the different business models, because most of the real estate companies are either asset heavy and therefore indebted. There are very few companies which are asset light. Probably Godrej is one of them. Oberoi is another one, which is a debt free kind of company. So one has to be very careful when you pick real estate companies, because debt levels can be pretty punishing for their financials, their ability to deliver profits, and therefore punishing on the valuations as well. Therefore, I would look at these kind of asset light business models within real estate, or the ones which have some element of even REIT kind of structures made available, and so on and so forth. So try to remain focused on only those companies which typically do not consume large amounts of debt.
Look at the markets this week, and although it's been a very slim gain for the frontline indices, actually very negligible. It's a small cap index that's gained about 3.2%. Some of the prominent movers this week as well include an Apollo Hospitals that's gained about 8%. Hero Motocorp as well has done very well in the last 1 week, a nice 5% up move. Add to that, you've had an M&M within the auto space as well that has managed to gain. Titan has been an outperformer, and you've got something like an Asian Paints too that has had a decent week. On the flip side though, ONGC, today it's a big drag and it continues. It's for the week gone by as well, has lost out about 6%. Ditto with Coal India. and Reliance Industries. We've continued to talk about that underperformance, stark underperformance at the time when the markets are looking fairly okay. Mahantesh, let's get in your take. What's the outlook on Reliance Industries? The fact that that heavyweight hasn't quite played catch up when as compared to at least the frontliners.
Now, Reliance is a very big stock. In fact, Reliance is also a very large component as far as the market's capitalization is concerned. But then the overall outlook for Reliance appears to be quite positive. They have been doing steadily better over the years. They have tackled their debt issues. They have seen to it that their telecom business has become a big money spinner for them. The retail has also joined into the party when it comes to useful profit contribution. And the oil and gas sector has transformed itself from purely a refining kind of company to a well diversified asset pool, also on the petrochemical side. So having said that, the outlook for Reliance does appear to be positive. They are. This is a company which is directly linked to the economic activity, directly linked to the economic prospects of the country. And I believe that as the country has started recovering post the COVID lull, a company like Reliance, which has an overbearing presence on the economic activities of the country, should do generally better. I once again would say that they have done better for themselves. The only thing that now is missing is that we don't see any major trigger points coming in. We used to have triggers in the past, such as new investments that they attracted to make their on the geo platforms, for example. They had triggers related to certain asset sales. We haven't seen any M&A activity to a large extent from Reliance as yet. So missing are the triggers for any stock growth. Disclaimer here, I own the stock.
So the outlook remains positive for Reliance Industries. But let's take a quick one word answer from